Good morning, everyone. This is Ryan Edner with your Wednesday, February 26th morning market commentary. We do want to first point out before anything else that coronavirus fears are going to continue to guide this market whenever we do see large-scale panic. We did see that in the grain markets, or all ag markets actually, on Monday. We did see the grains avoid that yesterday. So what we want to look at here is the fundamentals, but always keep in mind that any coronavirus fears do come first whenever they are large enough to spill over to the ag markets. Let's look at recent ethanol reports. We're going to get a new report here today. We see that on this chart, what we want to focus on is the gray bar. The whole goal for USDA for the year is 0.9% over last year. We see we've had quite a streak of reports that have come in above that. So these reports in general have been good. If they continue even mildly at this pace, we should still be able to reach a USDA target or even better. So we'll see what we get this week. Again, that target is 0.9%. So when looking at weekly reports, that's the number we want to come in above. Let's also go back and look at Friday's Commitment to Traders report. A little bit of a surprise here in the grains. We actually saw that before the whole coronavirus panic started, funds were actually starting to lightly cover some short positions in corn and beans. We do see in recent open interest reports that open interest is going down, which maybe isn't the best guide for guessing what the next Commitment to Traders report will be, but if there is an early hint, it would say that they're actually still short covering. Again, let's not get too excited about that until we see Friday's Commitment to Traders report. That'll tell us for sure what they are doing, and also factor in if they did sell more on Monday's panic, how much did they sell? Now let's flip over to cattle. Once again, what we want to do here is compare this year's fund liquidation slide to 2018. So first, we're going to look at the 2018 chart. We use that year because funds had a similar 100,000 contract long position. When they finished liquidating, the ugliest of the slide was $21, almost $22 actually. But when they finished, we came back to a fair value that we were looking for around 107. Now let's flip over to the current June chart. We don't look for that full almost $22 slide, but if funds do liquidate all 100,000 longs, we could certainly reach a June level of 103. We mentioned 103 because it's significant, as that was the level where the plant fire panic finished off and finally found support around 103. And we do still project, even after its fund liquidation, if it does push us that low, that the market eventually bounced back to our fair value level of 112 to 114. Looking this week for the cattle fundamentals, show list is plus 8,400. Last week's average cash trade is 120. We already have a 115 trade in Kansas. That is $5 lower. However, futures have also already factored in $5 lower. So we'll see. We could say that futures already have that properly factored in. We'll see what we get here if we do find even lower cash trade as we finish the week, or if funds continue to sell to push this market a little bit farther.